Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm your host, Craig Stevens, founder of AccessIPOs.com, and today our focus is going to be on CoreWeave. CoreWeave is an AI darling that filed for an IPO this week, and investors are going to be excited about this one. It's looking like a $35 billion IPO, so we'll be talking about that. We'll take a look into the S1 filing a little bit, but we'll also talk about the timing of this IPO. When should we expect the terms to be released, amendments, roadshow, and the IPO date. Then we're going to look at a few news stories this week. Klarna has an IPO coming up. StubHub made some news. Discord, Ramp, and Shield AI. But first, let's talk about this CoreWeave IPO filing. It came out on March 3rd, and we knew about this IPO. We knew this was happening. There was a report in, I guess, late November or December that said that CoreWeave was rushing to get their confidential filing set. And so we were pretty sure in December that they filed confidentially. Then last week we heard a report that the S1 was going to drop within a week, and that came true. So investors are furiously running through the S1 filing and trying to figure out if this thing is investable or not. CoreWeave calls itself an AI hyperscaler, which means it provides massive scale cloud computing infrastructure and services with vast data centers offering on-demand computing, storage, and networking resources that can scale dynamically to meet the user demand. And in CoreWeave's case, that means Nvidia HGX H100 graphic chips. These are the chips that AI developers want, and CoreWeave has them. And so they sell the GPUs as a service, making them more accessible to everyone. Now, before we get into more of the nuance of this filing, a little bit about the history of this company. So CoreWeave actually started as an Ethereum miner. And back in 2017 or so, it was founded in 2017, they started buying up all these Nvidia chips and GPU chips and started mining Ethereum until about 2019 when crypto took a pretty big hit. And so as the crypto industry sort of fell out of favor temporarily, CoreWeave saw this opportunity to pivot toward AI. They already had all the chips that people wanted to use. So CoreWeave pivoted and started selling this AI modeling processing service. They changed their name to CoreWeave. They're originally known as Atlantic Crypto. They became CoreWeave in 2019. And so this is just a story of how this company made a significant pivot, headed right into this AI boom, which really launched in 2022, at least to the public, when OpenAI dropped ChatGPT to the public. That was an extraordinary event. So CoreWeave is really at the forefront of providing these chips to users who need it, and the AI boom, which is happening right now. And few companies can really compete with Nvidia right now in terms of chips. There's some startups that are working on it, and some other companies are trying to. But CoreWeave is another way to play the Nvidia rocket ship, because they have access to all these chips. And some of the bigger companies have taken notice, and most notably Microsoft, which is now something like 60% of its business. So CoreWeave has a bit of this risk where one very large customer is providing a lot of the revenue. But if you're going to have one really dominant customer, Microsoft is a pretty good choice. We talked about Cerebras. Their big customer is in the Middle East somewhere. And so that's where the risk came in from the government regulation standpoint. But everyone mostly trusts Microsoft in the United States to be a pretty good customer if you're going to have a big customer. And so that's where CoreWeave stands. Big customers like Microsoft have noticed that CoreWeave has access to this processing power, and they're willing to pay up for it. So this deal is expected to be a $35 billion market cap at the IPO price, and they're hoping to raise somewhere between $3 and $4 billion, which is really extraordinary considering that this company was worth about $23 billion just in November 2024. They did a tender offer in October last year to bring Cisco on as an investor, the public company. So that's actually a backdoor way you can invest in this deal, by owning Cisco shares. But Cisco came in at about a $23 billion valuation just in October 24. And now here we are in March of 2025, and they're talking about a $35 billion IPO. And that's just where the underwriters are placing this thing. This could be much bigger. If institutional demand likes this deal and they like that revenue growth, then we could see this valuation increase before the IPO or certainly pop after the IPO. And that's where retail investors like us want to participate. If this thing's going to pop, then I want to be a part of that deal. And so that's part of what we do here at accessipos.com is we help people find opportunities to invest in these IPOs. But believe it or not, CoreWeave is actually very investable. Just last week, I got an email from one of the pre-IPO marketplaces saying, "Hey, we're selling CoreWeave shares today." So these shares are still available on the pre-IPO marketplaces. In fact, I posted to Twitter, Hive transactions are happening right now. It's also on my radar page that some of these shares changed hands at $1,460 on March 3rd. So shares were trading on March 3rd, the day that the S1 dropped. And the other thing that's interesting is, shares are trading at $1,460. That's a really high share price. So it looks like they're going to have to make an adjustment headed into this IPO to bring that price down to earth so that retail investors are going to be interested in participating in either the IPO itself or buying after the launch. Of course, we don't like chasing IPOs. We want to get in at that IPO price, but if the price skyrockets after the IPO, we want to stay away from that. We want to try to get in at the IPO price. And if not, then wait for a better opportunity if you're a long-term investor. So a little bit about the IPO timing. This S1 dropped on March 3rd, and March 3rd S1 filing suggests that there may be a shot of getting this thing out the door by the end of the month. I actually think it's going to probably happen in the first or second week of April because they got to shop this thing around to investors. So where it goes from here, so March 3rd was the S1 drop, and usually a few weeks later, they amend the S1 filing, and that'll tell us the terms of the IPO. How many shares are they issuing? How much do they want to raise? What is the market cap? But first, it comes out with a price range. So it's going to tell us the shares offered, the price range. And then the night before the IPO, they're going to price the IPO. Usually it's within that range, but if it's outside of that range, you can get a sense of demand. So if it's below the range, expect that's lower demand. If it's higher outside of the range, that's higher demand IPO. So timing here, I'm thinking probably the first week in April. I could be wrong, but that's just my guess. But we should see the amended S1 filing come out in the next 2 or 3 weeks. That kicks off the IPO Roadshow, where you can go to retailroadshow.com and check out the investment deck. And usually within that deck, they tell you what the actual IPO date is going to be. They do have to plan a little bit. In this case, it's going to launch on the NASDAQ. So they need to plan the day where they show up at the NASDAQ and ring the bell, or when they do that at the NYSE. All right, so we're going to look at the S1 a little bit here. What's really cool about an IPO is it's the public debut, and if you become a public company, you need to register with the SEC, and SEC needs to approve everything you're doing. So the S1 is really the all-encompassing document that's going to tell investors what's in store, or what you've done to prepare for an IPO, the risks, the details of the deal itself, and it really just kicks off the IPO process. So in this initial S1 filing, of course, there's a lot of blanks. So when they do the amended filing, those blanks will disappear. All right, the first thing in this S1 filing I want to point out is the underwriters. And we learned in the fall that it was a Morgan Stanley, JP Morgan, and Goldman Sachs deal. So first of all, the order of the names here is a big deal. In fact, sometimes they even say in these filings that these banks are equals. But in this case, Morgan Stanley is the clear lead underwriter. Even you got JP Morgan and Goldman Sachs there. And from my years of following this stuff, Morgan Stanley is one of the stingier, I would say, underwriters in terms of giving access to retail investors. Goldman Sachs is actually one of the better ones, believe it or not, but Morgan Stanley has a tendency to really offer shares to its best customers and all of its wealth management clients out there. I suspect if you're a wealthy client of a Morgan Stanley financial planner out there, that you could probably get shares of this deal. Institutions are certainly going to get shares as well, but I've always found that Morgan Stanley to be really one of the worst. So right off the bat, retail investors are maybe struggling to get access to this. Thankfully, JP Morgan and Goldman Sachs are playing a part too, so they might be able to shuffle some of these shares off to some of the online brokers that we talk about that offer IPO access. Those include a trade station through Click Markets. It includes Robinhood and SoFi, sometimes Webull. So we're going to be watching those brokers, and sometimes you get lucky, and within this area where they list out the underwriters, you might see like SoFi Invest or Robinhood, or you can search through the S1 and find one of the brokers that offers access. We just don't know if retail is going to get any access. Now, Morgan Stanley owns E-Trade, and from everything I've heard, back in the day, maybe a decade or two ago, E-Trade used to get some access to IPOs, but in recent years, E-Trade customers have complained that there's just really no access to these IPOs. Fidelity is another one, but typically the highest demand IPOs of Fidelity are really hard to get access to shares. I got access recently to the Venture Global IPO, and it was a bit of a dud. So Fidelity is an option. But we're not seeing any of those names here. We are seeing a lot of big name underwriters. In fact, we got Barclays and Citigroup, Wells Fargo. So a lot of big names here, but really no clues as to who is going to offer this to retail investors, if anybody. All right, so the next highlight here is this revenue number, this 1.9 billion revenue number in 2024. And the revenue growth, 737% revenue growth from 2023 and 2024. And so now you know why this company is IPOing in such a hurry to IPO, is that AI is hot, Nvidia chips is hot, and you got revenue growth. And you got those three things, and really this is lining up to be a blockbuster IPO, and at $35 billion, a lot of shares to go around. They can raise a lot of money for growth here. They're not profitable yet, but they can use the money they raised in the IPO, which could be $3.5 billion, to invest in more data centers, to invest in more chips, and to do what they need to do to grow and to get profitable. So that revenue number is extremely attractive. It's getting a lot of press. And if you're following along on YouTube, you can see I'm sharing my screen. If you're just listening online, I'm actually showing the S1 here as we talk about this. So revenue in 2022 was $15.8 million. In 2023, it was $228 million. And in 2024, $1.9 billion. So that's really extraordinary growth. I read somewhere, I can't remember the source, but somebody was predicting like $8 billion revenue for 2025, which is really extraordinary, to 4x 2024 revenue. If that's true, then investors are going to be very, very hungry for this IPO. All right, so the next thing I want to point out in this filing is one of the risks. And these S1 filings, in really any public filing for a company, there's just long laundry list of risks, because that's what these companies need to disclose to investors. They want to disclose the kitchen sink. But one of the really substantial risks is their indebtedness. Right now, CoreWeave has $8 billion in debt, which is just a function of borrowing over the past few years to grow out its capabilities. So it says here, it may be difficult for us to satisfy our obligations, including debt service requirements. It may affect our ability to obtain additional financing for working capital. And so this is a company with a lot of debt and a very high interest expense. The interest expense in 2023 was $28 million, and this year, or last year in 2024, it was $360 million. And so when you have a lot of debt, it's going to be a drag on your business. What I've read, I believe in the S1, is that they may use some of the money they raised in the IPO to pay down some of the debt. And if I'm a long-term investor, that's what I want to see, especially any high-interest debt. So interest expense is something to keep an eye on here. A fast-growing company like this does need to have capital to grow. Hopefully this IPO will get them out of the habit of borrowing when they need to borrow, but something to keep an eye on here. The fourth thing I want to point out in the S1 filing is the beneficiary owners. We can take a look at some of the ownership here. So prominent investors include Fidelity. So Fidelity is on the cap table. So good chance that Fidelity will receive IPO shares for its customers. We got Jane Street, JP Morgan. Of course, they're helping to run this deal. Cisco, BlackRock. And then at the end here, we have Zoom and Nvidia. So technically, you could buy shares of Zoom or buy shares of Nvidia to participate in this IPO. Nvidia may be a bigger shareholder, but from a market cap perspective, it's not going to move the needle too much. So Zoom could be an indirect play here. They may benefit from this deal. But I'm also looking at some of the debt financiers here, and you can see Co2 and BlackRock, PIMCO, Carlyle. So some pretty big names here they've borrowed money from. But looking back to, 2023, August 2023, they raised $2.3 billion in debt. They raised some equity back then. So, and they're in May of 2024 raised $7.5 billion in debt. And I'm just looking at a CNBC article here. AI infrastructure startup CoreWeave raises $7.5 billion in debt deal led by Blackstone. So a lot of debt on this cap table, but a lot of big name investors. You better be sure Blackstone did not lend or lead this $7.5 billion debt deal if they didn't think it was legit for it. So what must have happened is CoreWeave must have had a big client like Microsoft say, hey, we want to buy a lot more GPU time from you, a lot more compute from you. You guys need to up your game here. And that's when they went out to get that debt. So IPO hopefully brings down some of that debt. So Nvidia on the cap table. Another thing I read was that these founders here, these guys at the top, they've actually sold quite a few shares in recent months, I think back in November when they were doing this tender offer. So there's also a couple different share classes here. If you look at, you have the Class B and the Class A. The Class B shares apparently have like 80% of the voting rights. And so the three people here at the top, Michael Intrator, Brianne McBee, and Brian Ventura, they're going to be the ones controlling this company even after the IPO. They're just not relinquishing much of the decision-making to the public. And that, of course, is a risk that we always undertake if companies want to control all of the voting power. And that reduces the chances of an activist investor coming in and trying to ruffle up the feathers of this company. The last thing I want to point out in this S1 is the Microsoft piece of it. Microsoft, it says here in the S1, for the years ended 2023 and 2024, our largest customer was Microsoft, which accounted for 62% of our revenue in 2024, 35% in 2023. So it's progressively becoming a larger customer. And this is important, but at the same time, Microsoft is a great customer to have. But then just a few days later, the FT comes out and says Microsoft is walking away from some of its CoreWeave commitments that it made right before the IPO. And this one's a little curious to me. It feels almost like the FT is trying to sabotage this a little bit. I doubt they are. I'm not going to accuse them of that. I'm sure they have fine sources, but it just feels sort of predatory. Like, oh, we're going to have this IPO. And, oh, a couple days later, you come out with this convenient story that Microsoft is pulling out of CoreWeave. It certainly seems like there's other clients waiting in line to take up these GPUs. I just thought that was curious. And shortly after, CoreWeave denies that there's any contracts cancellations with Microsoft. It says CoreWeave hasn't seen any cancellations after the Financial Times reported that the largest customer, Microsoft, has moved away from some of its agreements. So kind of a weird exchange there where FT reports this exclusive story and then CoreWeave comes out and denies it. Microsoft is so big, it seems unlikely to me that one source came out of hiding and went to the Financial Times with this story. But here we are. So a very clear denial from CoreWeave on this story. So it seems like a non-issue now that they've disclosed that. Microsoft didn't comment, and it could be a mix-up. It could be a non-issue. I think it's going to be a non-issue. But remember, this is a similar issue that happened with Cerebras, which essentially postponed their IPO, which they were rushing to do as well. Cerebras had a big customer outside of the U.S. that made up 90 or 95% of its sales, and a government regulator stepped in and said, whoa, like we need to look into this before we let this IPO go through. 90% is a pretty high percentage. And as I understand, Cerebras is diversifying quickly across other customers. And who could blame them? Any business wants to diversify their customer base and not have just one customer in the UAE or somewhere in the Middle East buying up all of your chips. So that's where we are with CoreWeave. Keep an eye out for the amended return. You can go to my recent S1 feed on my website to follow any sort of S1, both amended and first-time S1s. They come out of a feed from the SEC, or you can go directly to the SEC website and search for S-1 filings, and they'll come up. But we expect to see that, it's probably not this week, but maybe the following week could come out on the 19th, the 18th or 19th, for an IPO, either the last week in March or the first week in April, I think is most likely. So keep an eye out for that filing. And when it does drop, I'll tweet it. I'll put it on the Access Club feed. I'll create a PDF and put it on my website like I always do. So you can go to my website. And I'll put a link to the CoreWeave IPO Countdown page on my website in this description, because that's where I really maintain all of the information, all the news stories and all the developments with the CoreWeave IPO as fast as I can in real time, most of the time, or shortly after the news drops. I'm usually on top of it and putting that information out there. So next thing to look for is that S1 filing that will tell us the terms. And from there, we should have a pretty good sense of the IPO date. We'll get the IPO roadshow, and the brokers who are going to get shares are going to start asking for indications of interest. That's the point where you go and say, hey, I want to try to get some shares of this thing. And at a $35 billion valuation, could be a pretty good chance that retail investors will get a shot. Morgan Stanley, I think, detracts a little bit from the odds there, but keep an eye out for it. So that's all for the CoreWeave portion of this episode. I do want to talk about a few other pretty big news stories in our space, some of which we knew were going to happen and others are sort of fresh. So 5 things I want to talk about here today about recent news stories. And the first is Klarna. Klarna is known as a buy now, pay later service, which is sort of like using a credit card, but you can buy something online and pay for it over equal installments over time. Sometimes you can do that for 0% financing or up to like 30%, but they have comparison shopping and other flexible payment options. So Klarna is just one of these all-encompassing fintechs that just wants more and more and more of your money once you open an account. They cater to not wealthy people, but I would say middle-income people and lower, where the app is convenient. There's some short-term financing options. So this is a product that a lot of people use. It is a Swedish company, and Klarna means clear or clarity in Swedish. But this deal was really never destined to IPO in Sweden or Europe. The founder had said multiple times that he was looking to IPO this thing in the United States. The Financial Times reported on February 7th that Klarna plans to release its F1 filing. It's a foreign company, so it's going to be an F1 filing, which is not right now going to my feed, so got to get that from the SEC website. But it says here they're going to release the IPO filing in March and then IPO in April. A Bloomberg report told us on March 5th that this timeline is going to hold. We now expect to see the filing the week of March 10th, which will kick off the IPO countdown. So at this point, Klarna is about a week behind CoreWeave. So we're going to get the CoreWeave IPO first and then the Klarna IPO second. One of the interesting parts of this Klarna deal, first of all, it's a Swedish company IPOing in the United States, kind of following that Spotify model. But Klarna CEO Sebastian Siemiatowski has expressed his admiration for the Google IPO, which happened many years ago, probably, I guess, more than 20 years ago now. But he told Fortune in March 2024, he's like, I've always looked to the Google IPO and feel that it was the perfect IPO. It's important that we have met the criteria that we have set up for ourselves to IPO. I hope that we'll be able to make it happen quite soon. So Google did what's called a Dutch auction IPO, which is a little different than a typical IPO. A Dutch auction is where investors submit their bids indicating how many shares they want and the price they're willing to pay. And then the company sets the IPO price at the highest level that allows all available shares to be sold. It's a little bit more of a market-driven IPO. The direction I think a lot of us want to go, just fair, more transparent IPO. But Google's IPO is really the model for this Dutch auction IPO. So we may see information about that in the filing unless, of course, the underwriters disagree and don't want to do that and convince Klarna that they shouldn't. But it seems like there's a good chance that's what's going to be because the CEO has indicated his interest in that. And he probably wouldn't have worked with anybody unless they agreed with that. As for the underwriters of this deal, it looks like the usual suspects, Goldman Sachs, Morgan Stanley, JP Morgan, perhaps several others. I believe those are going to be the leads. Yeah, so there was an FT article that said that Morgan Stanley, JP Morgan, Goldman Sachs, in that order again. I don't know. We'll see if it actually is in that order again, but it'd be sort of funny if Morgan Stanley, JP Morgan, and Goldman Sachs are also the lead underwriters for this deal, which could be telling you that maybe Morgan Stanley is pushing for IPOs right now and some of these other underwriters are not. If it's those three for both deals, that would be rather telling. Watch for the Klarna IPO filing early next week, the week of March 10th, and we'll probably talk about that next week on the podcast, assuming that one drops. Another somewhat major story in our space came out this week about Discord. Discord is in early talks with banks about a public listing. When I hear early talks with banks, that tells me we're still about a year away from the IPO, but if companies are really eager to IPO, they may move a little faster. Discord is essentially a social media company that users log into and sort of have communities that allow you to communicate and chat and do all kinds of things within the community. Discord has really become more popular with younger people. It started in the gaming community, and it's very popular in the development community, software development community. And anybody who's like not on Facebook, which is typically younger generation, or they don't want the Facebook groups, are using Discord now. And I'm on it for couple different Discord groups. Quite honestly, I don't use it a lot, even though I'm on these Discord groups. I'm not really compelled to go in there, but it is a good place to manage a community. I'm in some different communities and do have to go on there sometimes. It's actually good for like reporting bugs or learning about certain software. If you pay for a software subscription and you want to learn about it or find a power user, then the Discord is a good place to do that. So CEO Jason Citron was on Harry Stebbings' podcast, the 20 VC podcast, back in November. It was a really, really good interview. I suggest you go check it out. And Stebbings did ask him about an IPO. He didn't put a lot of pressure on him, but he essentially said, Jason, the CEO, essentially said, like, I'm not interested in being a public company. That's not why I lead this company. I want to develop software and solve problems for my customers. That said, he would take on that job if he had to do it. And he also wanted a way to provide liquidity to his early investors and to his employees. And he did make it sound like an IPO was the best way to do that. And we certainly agree. Instead of going and doing these tender offers, I think Discord wants to remain an independent company, but a public one to bring that liquidity event to its customers. So Discord has jumped up our list of upcoming IPOs. It may be in 2025 or maybe early 2026. Hopefully we get some more information about that. We just know they're talking to banks at the moment in the early stages. I have it 14th on my upcoming IPOs list. Definitely one to keep an eye on. Another company that we had on our list of upcoming IPOs for 2024, or most likely IPOs of 2024, never materialized. It was going to IPO. In fact, I think in June they were saying things like, "Oh, we're going to IPO in September." And then July came around. They said, "Well, we're not going to IPO because of choppy market conditions." And that company is StubHub. StubHub and SeatGeek are both private, and they were both considering an IPO in 2024. StubHub took those initial moves to say they're interested, they're going to do it, and then it pulled out. There was a Wall Street Journal article that said they're pulling out because of choppy market conditions, which everybody knows it was not choppy last year in 2024. The stock market was up 25%. And here we are in March 2025, and the stock market is choppy. But StubHub is now saying they want to move forward with their IPO. So we're going to assume that StubHub is ready to go with this IPO, that they have all of their ducks in a row. There was a report by The Information that StubHub was seeking a $16.5 billion IPO, and that's up from an early 2022 valuation. They were targeting a $13 billion valuation. And what I suspected, and I tweeted about this at the time, was that StubHub said they wanted to IPO at the $16.5 billion level, and they went out to banks, and they couldn't meet that level. And that's the reason why they pulled back the IPO, even though they said it was choppy market conditions. We all know the market conditions weren't choppy. They were just going up. So here we are in 2025, and StubHub is now eyeing a potential IPO. New York Times had that story. So it said talks are preliminary on this New York Times article, but we all know that they were moving ahead with this thing last year. So StubHub does seem to be on the clock to get this IPO out the door. And if it is a successful IPO, I do think that SeatGeek will not be far behind. Last but not least, just two fundraising stories that I think are pretty significant. Ramp, which is like an HR software and billing and payroll kind of software, popular with startups and mid-sized companies, has doubled its valuation to $13 billion. It was worth $11 billion in November. It's now looking like a $13 billion company. It did an employee share sale or a tender offer to help bring liquidity to its employees. Of course, we'd rather see an IPO, but that's been the trend, really, these companies doing these tender offers to give liquidity to early investors and employees. So it says here, it was a FT story. Peter Thiel-backed fintech Ramp nearly doubles valuation to $13 billion. So good to see some growth with that company. What we're always looking for is healthy growth in the private markets or in the startup markets, growing those valuations so that these companies eventually want to IPO and grow in public so that the public investors can participate in the IPOs first, but also just buy these innovative and disruptive companies. We want to see these companies public so the indexes can invest in them, and most investors who are just investing in index funds or mutual funds can then participate in the growth of a fast-growing startup like Ramp. One last story that came out this week, Shield AI raises $240 million at a 5.3 valuation to scale its business. Shield AI builds autonomous software, I think hardware, for the defense industry. And as most of you know, Anduril Industries is one of the hottest pre-IPO startups right now. It's now worth $28 billion. He's got a lively and boisterous Palmer Luckey CEO. He also started Oculus Rift and sold that to Facebook. So Anduril is really this hot startup in defense tech, and Shield AI is sort of capitalizing on the renewed interest in startup investing for defense, because there's a lot of money in it, and you have the venture the new administration is very much venture capital friendly, and so we're seeing defense spending shift from some of the old guard companies like Northrop Grumman and Lockheed Martin and L3 and Raytheon, those kinds of companies, going more toward these startups like Shield AI and certainly Anduril. So that's a long-term trend I think a lot of people are interested in investing in. And so Shield AI raises $240 million at $5.3 billion valuation. We're always watching this company on our radar, as we are with 200 plus and growing other companies that we monitor their potential to become public companies someday. And that's what Access IPOs is all about. That's all for today's episode. Thank you for joining me, talking about CoreWeave, talking about some of the other news in the space. Next week, we'll probably be looking at that Klarna IPO, so keep an eye out for that and tune in next week. And don't forget to subscribe to the podcast wherever you consume your podcasts. And I'm also on YouTube, so you can get a video of this on YouTube and subscribe there. And if you haven't yet, head over to my website, subscribe to my newsletter. It's free. You'll get twice a month in your inbox news about upcoming IPOs and various new companies that we're following on our radar. So sign up for that newsletter. You also get a really cool download. It's called the IPO process from startup to public company. Get a free download of that infographic and help you sort of follow along as these companies grow from little mini startups to these $100 billion companies. That's all for this week. Thanks for joining. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.